One of the 5 ways to start investing even with $100 that I talked in a previous video is investing in index funds. In this video, you'll learn about simple 3-step process on investing in index funds, as well as why to invest in index funds and why not to invest in index funds. Ready? The first step is to pause the video and click the like button. Once you've done that, let's go further. Hey there, Stocksbert here. On this channel I share with my experience and educational videos about personal finance and investments. You can find my other videos on channel's page, and you may want to subscribe for more videos in the future. And if you haven't made any investments yet, make your first investments right now. Invest your click into the like button, and I'll do my best to return your investments with the quality insights. So let's first get to know what is an index fund. An index fund is an investment that tracks market index that's typically made of stocks and bonds. Index funds usually invest in all the components that are included to the index they track. And they have fund managers whose job it is to make sure that the index fund performs as well as the market index does. And the first step to start investing in an index fund is to pick one. There are actually hundreds of different indexes that you can track using index funds. The most popular index is the S&P 500 index. That includes the 500 of the top companies in the US stock market. Here are some additional top indexes so you get to know them and have a picture in your head. Large US stocks are covered by S&P 500 index, Dow Jones Industrial Average, Nasdaq Composite. Also, there are small US stocks such as Russell 2000, S&P Small Cap 600. Also, there are indexes that track international stocks such as MSCI EAFE, MSCI Emerging Markets, bonds such as Bloomberg Barclays Global Aggregate Bond. In addition to these broad indexes, you can find sector indexes that are tied up to specific industries, as well as country indexes that target stocks in a single nation's, style indexes that emphasize fast-growing companies or value-price stocks, and other indexes that limit their investments by their own filters. And the second step is to choose the right fund for your index. Once you've chosen an index, you can generally find at least one index fund that tracks it. For popular indexes like the S&P 500, you might have dozens or even more choices, all tracking the same index. If you have more than one index fund option for your chosen index, you'll want to ask yourself some questions to choose the right one. First, which index fund most closely tracks the performance of the index? Second, which index fund have the lowest cost? Third, are there any limitations or restrictions that could prevent you from investing in it? And finally, does the fund provider that you chose have other index funds that you are interested in? The answers to these questions should make it easier for you to choose the right fund and start investing in index funds. And on third step, we are going to buy some index fund shares. To buy shares in your chosen index fund, you can typically open an account with the mutual fund company that offers that fund. Alternatively, you can open a brokerage account with a broker that allows you to buy and sell shares of the index fund that you are interested in. It might be ETFs that I talked previously. Again, in deciding which way is best for you to buy shares of your index fund, it pays to look at features and costs. Some brokers charge extra for their customers to buy index funds, so it might be cheaper if you buy index funds through the mutual fund company. Yet many investors prefer to have all their investments held in one brokerage account. So if you anticipate investing in different index funds that are offered by different fund managers, then the brokerage account could be the best way for you to combine all your investments in a single account. As everything has pros and cons, let's discuss some advantages and disadvantages of investing in index funds. So why invest in index funds? Investing in index funds is actually one of the easiest and most effective ways for investors to build wealth. And best of all, you don't have to become a stock market expert to do it. Investors find index funds especially useful for many reasons, and one of them is that they minimize your time spent researching individual stocks. Also, you can invest with less risk. Most indexes include dozens or even hundreds of stocks or other investments, giving you the diversification. Index funds are available for a wide variety of investments. You can buy stock index funds, bond index funds, or buy more focused index funds that track industries. Another reason is that index funds are a lot less expensive than their alternative like an actively managed fund. They are also quite tax-efficient investments comparing to other types of investments. And finally, it's just easier to stick with your investing plan. You can automatically invest months after months and ignore short-term ups and downs, confident that you'll share the long-term growth of the market. And here are some reasons why not invest in index funds. Yes, index funds are simple and easy, but they aren't for everyone. Some of the downside of investing in index funds includes the following. First, you'll never beat the market. Index funds are designed to match the market's performance. So if you want to beat the market, index funds won't give you that chance. With index funds, you don't have loss protection, as they track their markets in good and bad times, so when the market plunges, your index fund will plunge as well. And you won't always own the stocks that you like. Depending on the index you choose, you may end up owning stock that you wouldn't prefer to own, while missing out on others that you would prefer to own. To address some of the shortcomings, you can always keep a mix of index funds or other investments to give you greater flexibility. If you plan on solely using index funds, however, you'll have to get comfortable with their limitations. Here's more about how to invest your money as a beginner, where you can get to know what is the stock market, how does it work, how to get started investing in stocks, and all that. And of course, make sure to subscribe to the channel, like the video, and hit the bell. See you in the next video.